Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture. Me, Ryan Huang. And it's all about tariffs and the potential impact on the economy as well as stock markets. Well, let's take a look at how the economy is doing for Singapore when it comes to the latest PMI numbers. So looking at the S&P Global Singapore PMI reading, that's up to 52.7 in March from 51 in February, marking the second straight month of expansion in the private sector. So good news on that front, on those numbers at least. In the meantime, we have a separate PMI reading around the manufacturing sector, and that's showing some signs of weaker growth ahead, with leading indicators dropping a third straight month in March 2025 to their lowest levels in 8 months. And that comes from the SI PMM reading. So a bit of a mixed bag when it comes to the latest numbers. For more insights, we are joined by Jingyi Pan. She is the Economics Associate Director for S&P Global Market Intelligence. Good morning, Jingyi. How have you been doing these days?
Well, good morning, Ryan. And I think happy Friday to you, but I think a lot of us are not really liberated at this point, so let's get to discussing it.
Yeah, I hope you have some good news for us today, but let's start with the latest takeaways from the PMI numbers. And we are, well, on the surface, looking at a bit of a different direction when it comes to your S&P Global Singapore PMI versus what we are getting on another reading from the Singapore Institute of Purchasing and Materials Management. Walk us through the main takeaways on these two readings.
Definitely. Well, so Ryan, with the S&P Global PMI we have for Singapore, that's actually our whole economy number. So you're looking at not just the manufacturing sector, but a lot of the other sectors as well contributing to this improvement. As you mentioned, the latest number actually showed a faster rise in terms of the PMI, but likewise for output, it's higher above 50. And to where exactly do we see some of this growth pick up? That includes wholesale retail sectors, consumer services. In March, we're seeing some of these services-driven improvement that's helping to lift the number that we have seen. The fastest, in fact, actually has been also improvement in construction output within the Singapore economy. So that number itself at the highest number since end of last year. That's actually telling us that we are seeing the first quarter growth actually improve for the Singapore economy. I think that's a good sign. Relating to what we've seen on the SIPMM side, where we have a slower growth in manufacturing, that is also something we have seen in the manufacturing PMI, so the sector PMI, where we see manufacturer have that bit of slowdown. I mean, it's all about manufacturing at this point of time, given the kind of tariffs, particularly on goods by the U.S., and what we have been seeing, not just for Singapore, but I would say around the region as well, with the S&P Global PMI in ASEAN, it's also the kind of fading of the front-loading of tariffs. So earlier in the last couple of months following the announcement of the presidential election results, we have seen people started to export more, people ordering more, and that's helped to lift a lot of the Asian economies' export conditions. But towards the end of the first quarter, which is of course before the announcements that we've just heard this week as well, I think we've seen some of that starting to taper off, and that's also been affecting Singapore. Broadly, I would say the situation is still a little bit fluid, but no, we're going to talk about that next. Right.
Yeah, lots to unpack when it comes to the impact of these tariffs. And like you pointed out, front-loading effect is starting to fade. So where does it go from here? Because these tariffs, by some measures, have been worse than expected. What was your expectations? How did they fall in line with your expectations on what sort of tariffs we will be getting and what is going to be impact on the economy down the road?
Certainly, Ryan. So at S&P Global Market Intelligence collectively, we've been looking at global growth forecasts for 2025 to actually, be around 2.5%. And I would say that is actually the lowest already. So this was actually before what we have heard this week. And that number itself is actually the lowest since the GFC outside of the pandemic period for our forecast. To explain why that is the case, I think we have been in our organization seeing the threat of terrorists becoming something that's a little bit more concerning and actually putting more downside risk. So I would say I think this is probably a little bit lower than the market consensus already. But certainly, as you mentioned, a lot of the analysts themselves are also looking And one was just announced this week to be actually among the worst case scenario that was actually predicted. So I think there are still a little bit more downside risk to growth itself. The transmission channels, including just really on the lowering of trade, how this tariffs itself is going to affect demand and therefore lower that kind of purchase between countries as well. And not to mention, I think indirectly on supply chains, how is this going to shift supply chains that are in place, that are operating rather efficiently as possible. And finally, I think as well on the inflation front, how is this going to change? But with that being said, I think we also need to caveat that, there is still this seemingly sense that there's maybe room for negotiation or even room for escalation with the potential for retaliation. So I think things are still a little bit fluid at this point of time for us to actually pin down a number. I think the next 2 to 3 weeks is going to tell us a lot more as well, Ryan.
Yeah, supply chains are shifting. We saw Vietnam benefiting from the earlier Trump term from China Plus One, but now they are slapped with among the highest tariffs. So lots to watch out for on that front. And of course, down the road, we are seeing, or at least looking out for what might be the impact on the economy, especially with all the talk about higher odds of a U.S. recession. And then, of course, the inflationary pressures that might come through with higher tariffs. Jingyi, how does this shape your expectations of rate cuts down the road? Does this point to perhaps more likelihood of Asian banks easing and being more accommodative?
So I think, before we had this kind of certainty, or rather increased certainty that tariffs is going to come about at the start of the year, people are still perhaps, predicting a few more rate cuts to be going through in the year, because inflation isn't something that they see as perhaps rising much higher than the Fed's targets itself. But at this point of time, I think, we are seeing this is coming through to be quite a bit of a reality already. And to that extent itself, our team, S&P Global Market Intelligence, have in fact actually put our Fed rate forecast at them holding rates actually unchanged through to the end of this year. Now, why this being the case, I think to a large extent that's also due to the fact that we are seeing that the impact of tariffs so far just from March itself, that's really showing through in our PMI numbers. You have the U.S. import prices actually being the highest inflation in March against all the other major developed economies. And this itself, with a lot of the U.S. manufacturers already telling us that tariffs are coming through. And mind you, that's not only, in March, we have only seen a handful of economies having this kind of new tariffs come into play. So I think we can only try and imagine what the situation is going to be like after April 9th, where everything actually gets higher. We'll be looking quite closely to our April PMI results for that. But for right now, I think, that is something we have to contend with. And to that extent, I think it's going to actually derail the Fed's potential plan earlier in the year to actually further lower rates. Now, we know that they have a dual mandate as well. But on the other hand, we are also seeing the risk as well that for U.S. economy, recession risk is not acute, but it's not something that is absolutely out of the picture right now. So if that should actually come about as something of concern as well, we could be seeing the Fed actually changing their course. But for right now, I think inflation, that impact is getting directly being reflected in the numbers already. So that's something that we have to look at. So no more cuts potentially for the rest of 2025 based on current forecasts. But as I said, in the next 2 weeks, we have to see how much that retaliation may come through, because that's going to play as well into our calculations over here, Ryan.
So watch out for when it comes to the numbers and the data in coming quarters. We've been in conversation with Jingyi Pan. She is the Economics Associate Director for S&P Global Market Intelligence. Jingyi, thanks for your time this morning.
Thank you. Have a good week.
You too. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.